Namaste. Salam, my good friend. Bon dia. All right. Good morning, everybody. Nice to see you. Welcome to our weekly strategy session here at FXstreet.com. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com, an ECN that allows you access to the interbanking market for Forex, but you can also trade energies, metals, indices like Nikkei, the DAX, the FTSE, the Dow, and access to binary options for scalping and hedging. We do these sessions once a week here at FXstreet.com. It's a mix of technical and fundamental analysis. And the first Friday of the month, we throw in trading non-farm payrolls live, which I've been doing at FX Street for about 10 years now. So again, I'd like to mix a little technical, a little fundamental, but the general idea here is you're the boss and I'm just a humble currency trader. And I want you to lead the session. I can talk about almost anything from scalping to position trading. So whatever you're struggling with, let's put that in the focus. My general goal, because I don't really have anything to sell you, I don't have a book or anything. My book I wrote 7 years ago, 8 years ago. Holy smokes, really? So, here's what I want from you. I want you to develop positive trading habits and skills. And I want you to become a successful Forex trader. And once you have the skills and confidence to trade real money and have the ability to do it for many years, I would like you to open an account at tradersway.com. Is that a fair goal? I'll help you become successful and confident in your success through analysis. And when you're ready, you choose Traders Way as your primary brokers for your successful trading business. Cool. So my first goal, sort of my starting point here, is for you to make at least 1,000 pips profit specifically from attaining these webinars. Now, we know the catch here. I can't put the pips in your pocket for you, but I would like to give you trading and training ideas and methodologies that you then employ on your own, and you put in the blood, sweat, and tears for years. And then you look back and you say, you know what? That was helpful. And you're like, 1,000 pips, that's got to be worth 10,000 pips. And you just know it. And there's no need to even discuss it further than that. So let me ask you something. One of the things that we focused on was developing a marketable idea. Another way of looking at it is you have a fundamental or long-term technical bias for a currency pair, and you print out your charts as evidence. You write down what you want to do. So if it said sell EURUSD, you actually write that down, and then you post it on your wall. Has anyone actually done that? So far, about 10%. 15% of people in the room. Okay, so we got 20% of people in the room have done it. And has anyone heard this for the first time? You're like, man, what's he talking about? Sounds good. Or maybe it's just like, what's he talking about, Willis? Okay, well, that's fine then. And then why not do it? More crickets. All right, well then let me change the question. Do you think that having a long-term technical or fundamental bias is bad and would hurt you? Well, Mike, that's the easiest part. Flip a coin. Whatever it is, I'm good with that. Done. Don't bring it up again. It's easy. Well, one of the best things, in my opinion, about having a bias is you know when you're wrong. Because, unless something fundamentally has changed, and has anything fundamentally changed this week? Well, we learned that the ECB is going to add to their quantitative easing at the December meeting. Cool. Euro got weak. Now, the cool thing is we've talked about that for about 2 or 3 weeks. We were preparing for that. Cool. So last week and the week before here at FXstreet, I talked about the Euro USD going up, and yet, and this was the point that kind of blew people away, nobody was buying the Euro. How many people remember that message? Like, we talked about it for a huge part of the last 2 meetings. Euro USD is going up, but nobody's buying the Euro. It must have been, if you combine last week and the week before, at least an hour's discussion. And probably non-farm payrolls, too. Thank you. So at least an hour and a half worth of discussion recently, specifically on the idea of Euro going all the way up to 115, hundreds and hundreds of pips. Yet no one was buying it, and I knew that from the Commitment of Traders report. And that the idea is we don't necessarily know when, but somewhere along the line we're going to hit resistance, and those bears are going to get back in, and the euro dollar is going to drop. Is that the message that you got? Like that focused? Euro dollar is going up. There's no fundamental reason to change because central banking policies have not changed in such a way that a euro dollar would go up. Evidence through the Commitment of Traders report shows several weeks of the euro not going up as far as open positions, but euro dollar going up in valuation. So we just simply know it's bears getting out. At some point, it's going to hit some sort of solid resistance. You tie that around a bank meeting of potential continuation or expansion of quantitative easing, euro dollar drops. Right? Now, did we know when the ECB and the Fed and the BOJ were going to meet this week? Or was that a mystery? Yeah. Now, I was hoping out of the BOJ today we would get additional increased quantitative easing, right? Because that's what we got last year at this meeting. And we didn't get it. Well, I suppose that's why hope's not a strategy, right? So we didn't get it, but what did we get? They're not hitting their 2% inflation target. They're going to delay the expected that they think it's going to take them at least 6 months longer to hit their goals. So they just bought some more time. Too bad. So sad. One of the things they're doing is they're blaming oil prices. So they're saying, look, the economy is doing well. We're not getting the wage growth we wanted. So if you remember a year ago or maybe 2 years ago, the government actually went to major employers in Japan and asked them to sign a document, not a legal document, but sort of like a pledge to increase wages. And we're starting to see signs that that's not happening. Bloody businessmen, right? So it's not translating into higher wages. So they want to talk about that a little more. But generally speaking, they're blaming lack of inflation on low oil prices. How funny is that? It's funny because the Japanese will complain about their currency being too weak. Then they'll complain about their currency, being too strong. Then they'll complain about oil prices being too high. Right now they're complaining about oil prices being too low. Amazing. Yeah. Yeah, it's amazing, right? And YJ, do people in Japan talk about that? Like, what a big mistake that was? Like the bonehead move of the century? Really? Amazing, huh? So anyways, this was a big week in regards to fundamental analysis. We had on our minds, we really were interested in what in the ECB adding quantitative easing, cha-ching, potentially, but even low. At one point, people were interested in whether the Fed was going to raise interest rates in October. That didn't happen, but the real topic was December. The Fed has been saying since about summertime that they're going to raise this year, they're going to raise this year, they're going to raise this year, they're going to raise this year. And yet the market said, you know what, I don't think they're going to do it. I don't think they're going to do it. I don't think the market kind of gave up. The interesting thing about it, the market has been pricing in a rate hike when the Fed said they were not going to do it, which is stupid. And then when the Fed said they were going to do it, then the market says they're not going to do it. And wow, is the market confused? And I don't really understand why, because the Fed keeps telling us exactly what they want to do. So I don't know if it's maybe billionaire investors spend all their time watching TV and getting sort of the exciting version of the news, where if you actually just attend the meetings or actually just read the transcripts, it's pretty clear. The Fed has said, and then based on other speeches by members of the FOMC, it's been said multiple times, maybe 10 times now in the last 6 months. They're going to raise interest rates this year. The October meeting, if you looked at the probability of a rate hike, it dropped all the way down to 5% probability. So that was a no-brainer. But the interesting thing is, at one point there was a 60% chance of December rate hike, and then that dropped to about 30%. Okay? So one of the things that we're watching now is using the Fed funds futures market, looking at the spread in pricing amongst future months, and using that pricing data to discern interest rate probability hikes, mixing in non-farm payrolls headline numbers, and predicting whether the U.S. dollar is going to get strong or not. Is anybody interested in that? Isn't that interesting? Now, I did a video. I should probably search for it first. Hang on. Fed funds. Oops. Oh, back. Fed funds futures. See if I can find my video. VIX and Fed Fund future rate analysis for currency traders. All right. Would anybody like to watch a video about the Fed Funds futures market and how to use the spread between future months to predict the probability of a Fed hike and the volatility index and how that's important to currency traders based on intermarket and currency correlation? All right. Give me $50 and you can watch my video. Or you can go there. Cool. So anyways, what we're talking about this is here. And the interesting thing is we were looking at the same sort of study for interest rates in Australia, and they're also moving. So these are all the front months. Here's the December contract, the January, the March, the April, right? The June, the July, the Sep, so on and so forth. And they're all the same 30-day Fed Funds futures contract, obviously the same risk profile. The only difference is price, and the price would change based on the expected futures price, or the expected interest rate. And you would have to discount, if interest rates are going up, you'd have to discount the price to get someone to buy your low-paying bond versus a higher one expected in the future. And so you're looking at the price. So right now, if you lent the U.S. government $99.80.5, right? So $99.80 you lend to the U.S. government, which is possible now because they raised the debt ceiling. Good job, United States of America. Just got a new credit card. Cha-ching! All right. All right. Good job, America. So you want to go out, you lend the United States of America $80 so that they can build a Humvee and put it in the desert somewhere and watch it rot. And the probability of interest rates going up is 47%. And what you're getting at is you're looking at 99.80 cents versus, let's look at June. Well, I guess April's, is that actually 6 months? Yeah, about 6 months. Let's look 6 months into the future. You only have to lend the U.S. government $99.63, right? 17 cents different. So if, right, based on the April contract, if you lend them $99.63 when the contract expires, when the bond matures, you will get $100 back from the government. You lend them $99.63, and they give you $100 back. That's how it works. So there's no interest rate. There's no coupon payment. There's no interest rate. You just get a discount. You loan them $99.63. They pay you $100 back. Okay? And so you can see there's a 73% chance based on the difference in price. So now you take these prices, right? And so on and so forth. Watch the video if you want to get into it. But I'm just showing you there's difference in prices. Same bond, same risk, different price because of expected changes in interest rates. Now, the reason I like the Fed Funds futures market to predict interest rates, well, first of all, it predicts whether the dollar is going to get strong or not, doesn't it? Isn't that interesting? And it's not an opinion. Okay, so the most liquid market in the world is Forex. We know that. The second most liquid market in the world is the U.S. bond market. Okay, so this is investors globally in a giant auction with hundreds of billions of dollars to spend. And in this auction, they are setting the price bidding it up or bidding it down. And from that, right, they're determining interest rates and prices, just like anything else. Okay? I like that because it's money doing it, not opinion. It's opinion through money. It's not a survey. Hey, how do you feel about interest rates going up in December? Couldn't care less about what you feel. I'm a cold-hearted snake. Couldn't care less. But money is interesting, isn't it? If someone decides to move $1 billion here versus $1 billion there, that's interesting, isn't it? Janet Jackson? Oy vey. Come on, that's not Janet Jackson. Is it? Or is it the other one? I was thinking maybe it was... Yeah, maybe it was Janet Jackson. I'd take it back. Good call. I was thinking it was, what's her name, the drug addict from the singing show. You know who I'm talking about? I can't remember her name. I don't know. I don't like famous people. All right. So, yeah. So I love it when someone says, you know what? I got $1 billion, but I'm going to put it here, not over there. And I'll say, well, really? Why? Why did you make that decision? And that's what this Fed funds market is, right? So if you watch that video I posted there, you'll find out what it all means. And it's billions of dollars exchanging hands. So if the market thinks interest rates are going to go up, the value of the U.S. dollar is going to go up too. And guess what? Oh, snap. I'm a currency trader, and that's important information. Paula Abdul, there you go. Thank you, Jimmy. Crazy drug addict. All right. So, do you see a currency chart? Yeah, I think you see euro dollar, huh? So we'll see how this plays out. I have this kind of idea going on. Oops. Okay. So we'll see. Looks like I got to get through today. I wasn't playing this 4-hour chart. We just happen to be on the 4-hour chart. It's just a trade, dude. Right? It's not like a deep dark poem I wrote. Okay. So we'll see how it's going. I suppose we don't need this on weekly, do we? So I guess if we're going to use this day chart, this could go quite a bit higher, but I think we've already played that. That's the issue. We've already played that. So if we're going to fall off the daily 5, we should do it. If we're not going to break to the downside now, which means we've moved to the bottom of the range. You can see we got pretty close to the bottom of the range. Then I think what we'll do is we'll have the bigger pullback, right? Like that. Oh, come on. Well, maybe I'll do it this way. Okay. And we'll come up into this area. The daily 21 will come down into the roll reversal, and we'll hesitate for a little while and then come up. But here's what I'm thinking. The Fed Funds futures rate for December meeting went from 30% to about 50% chance of interest rates rising in October. I believe the Fed's going to raise interest rates. I only believe this because in June, I think it was. Was it June? Might have been the next meeting. This summer, Janet Yellen said in congressional testimony, they're going to raise interest rates this year. They said it that clearly. Then she said it again in 2 or 3 public meetings. So she said it publicly when the press was there. She said it under testimony. And several of her members of the FOMC have also said in public speeches and in public interviews with media that they intend on raising interest rates sometime this year. There's a voting member of the FOMC that says we should raise interest rates now, that we should have already done it. Okay. So, I believe between now and, is it December 20th or December 16th? I guess December 16th is the next Fed meeting. They're going to raise interest rates, and as we get closer and closer, the members of the FOMC are going to be worried that the market still doesn't get it. I believe the Fed's confused why everybody's confused. They keep saying, look, we're going to do it. So anyways, because they said it again, the probability of a rate hike's gone from 30% to close to 50%. This needs to go from 50% to 100% between today and December 16th. So they're going to come out guns a-blazing, like blaze of glory, right? And they're going to get people's attention. If they do this, because remember, I don't know the future any more than you. If they do this, as the probability of the December hike goes up, the dollar will get strong, the euro dollar will fall. Are you paying attention? I'm trying to predict the future and make you money. Okay? So you're going to watch the Fed funds futures market and the difference in pricing amongst front months. And you're going to watch the probability based on professional money pricing the different months. Okay? What else do you think will convince market participants to buy the dollar and sell the euro? Besides Fed funds futures market, what else and not rising to the upper end of the range? Because this is the million-dollar question, right? We're at the bottom of this macro range. Are we going to go up to this micro resistance, or are we going to go to the macro resistance? Which one? I'm suggesting, I think, if we pay attention and we get what we want, wink, wink, nudge, nudge, that maybe it'll only come up to here, and then we start to get more information. That's what I'm hoping. No, we already got that, guys. We already know QE, ECB. We already got it. That's what you just told me is you didn't make the 500 pips on this move. That's what all this was. All right, thank you. I'm looking at non-farm payrolls. A good non-farm payrolls. Good meaning better than average. Are you listening? A good non-farm payrolls will convince the market that the Fed has to raise interest rates. Because this is how they think all the time. They just have to now. They have to. They have to. All right? If you attend my Trade Non-Farm Payrolls live event, and what is it, month 114? Something like that, I'm guessing. Is it 114? Holy smokes. Now that's a trend, guys. It's probably been longer than you've been married. $114 is a lot. That EURUSD was going up. Boom, we got that now. It's done. We moved 500 pips. We're done. Those pips from the additional quantitative easing already in the bank, already spent it. Already drank the champagne, my friend. I need some more, right? I need some more. I need a new thing. So now, a good non-farm payrolls, better than average. Good doesn't have to be great. Good is just good. The market will suddenly say, oh snap, Fed has to raise now in December. What happens to the probability indicated by the difference in front month pricing of Fed funds futures contracts? John, that's a good answer, but too complicated. But you're right. John, you're right. Okay. So we're at what, 47% now? If we have a good non-farm payrolls, it may be on Friday, and then maybe check again on Monday. If that goes up significantly, let's say from 47 to 67%, we're on our way to parity. No, all that's priced factored in, James. They already adjust for all of that. Yeah. So, if we get a bad non-farm payrolls, we're heading up here. We're going to wipe out all those sell orders. So just imagine this process here. Just imagine hundreds of billions of dollars in orders short. Okay. 200K. No, I'm thinking more like 250, 240, you know, a little bit better than average kind of thing. But if it's a poor number, whatever that means, certainly less than 200, they're going to say, you know what, the Fed can't do it. Forget it. And what will happen is we'll get a spike. We'll hit stop losses, which will spike more, which will hit more stop losses. And those that trade without stop losses are going to hit the panic button, and this thing just goes up and up and up. And you'll see the Fed funds futures market probabilities of the rate hike will drop from 47 back down to 30, and that's it. And then you'll need Grandma Yellen to hit the streets, knocking on doors, trick-or-treating, and telling the world, hey, we're going to raise interest rates. We're still 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 going to raise interest rates. and it'll take a while to get people to listen. But let me tell you something. Unlike the scumbags at the Swiss National Bank, the Fed really is trying its best to be transparent. And it's dumbfounding to me why the market doesn't get it. I just really, I'm grasping at straws now to figure out why the market doesn't get it. Because in my opinion, the Fed has been extremely clear and transparent this year. They have. They've just told us. They just tell us in plain, simple language. And, people don't get it. So it's frustrating, but whatever. I think what it is, it's just there's so little to do if you were a risk-averse investor with billions of dollars. There's just not a lot to do, and you're scared, and you're looking around, and you're nervous, and all these different things, and probably worried about all the wrong things because you're risk-averse and you need yield, but you don't want the risk, and especially if you have a long-term horizon, and central banks keep changing their policies, and it can be difficult. I did a video yesterday on how to get filthy, stinking rich trading Forex. And it's the opposite of what I just said that, a lot of institutional investors are looking for. There's different strategies. Wayne, you have a short position? Yeah, you can see it says short sell. Does everyone understand why I sold there? Oops. Did I just kill that? There's no... Did I really? No, did I? 1 hour. Where's the 1 hour? 5 minute 4. I can't believe I just did that. Those days. All right. File. New chart. Euro dollar. Boop. Give him everything that you want. Accept the things that you want. You are the first one of your kind. All right. So we're back. Do you want me to add some pivots to this? Let's do that. Templates. Dun, 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 dun. Come on now, touch me, baby. All right, so here we go. Let me zoom in a little bit. This is an hourly chart, euro dollar. Look at that, 200 pip move during the New York session, 198 and 0.9, right? 199 pip move. That was a good New York session, huh? Okay. So again, the way that I look at this, if you're trading with price action, I look at this low here, and this other low here. I'm going to drag this across. And I can include this if I want to. Why not? I can do whatever I want. Okay? See this? In an ideal world, right? In an ideal world, using price action, and by price action, what I mean is lower low, lower high, lower low, lower high, followed by a lower low. Okay? That's all I'm asking for from this market. Okay? Anything higher than that's going to be less desirable. think the highest I would tolerate this in a real world would be about 110.50. But having it come all the way to 111 would just be redonkulous. Okay, so I'd like to keep it really, if I had to, I might give it that much wiggle room. Okay? I'm hoping this hourly divergence plays out in my favor. I understand that what it's doing is buying its time to complete a cycle here. But I'd like to keep it below the 21.55 on the 4-hour. I understand there's some issues with the daily chart and all that kind of stuff. So, I don't know. Sometimes you get yourself in this mess. I didn't make it drop that far. So, I think it's a reasonable place to take a second shot. Don't you? It's reasonable. I think it's within reason of technical analysis, right? So we have a high, a low. It comes back here, but now I want to sell. Okay. So it'd be nice is maybe over the weekend, Janet Yellen and her friends say something to somebody. Blue Horseshoe loves the U.S. dollar. Yeah, I'm sure there's all kinds of reasons you can justify it if you wanted to. But that's all I'm doing, just so you know. It's only money. Okay. So, how can I help? What's on your mind, guys? We've talked about the Bank of Japan, the ECB, the Fed, Fed funds futures market pricing. How's it going so far? It's been 45 minutes, right? Has it been interesting so far? Do you guys, how often at FXstreet, because this is the only event I attend, unfortunately, do people cover things like the difference in front month pricing of Fed funds futures contracts? Do they do this? I honestly don't know. Anybody, guys? There's 3 that say no. Come on, there's 97 people in the room. They do. I guess, I don't know. You guys are the ones that attend, right? So. Jerry's like, you're the other. Well, thank you, Jerry. There's lots of great speakers at FXstreet, right? So. Oh, really? VJ, this is your very first webinar. Well, welcome. All right, cool. Well, thank you for your loyalty, guys. Right on. I'm here to help, so I'm happy to help. So what do you want to do? You just want to do like some technical analysis? We did fundamentals. I'm required to cover fundamentals because I put that in the description. This is your last. Cece? What's going on, Cece? Oh, really? Yeah. Well, before you done it, because let me just say a couple of things. Early on in my career, I did get very, very, very frustrated with trading. And I did look into the abyss. And I wanted to know if I should dive in and disappear forever. And I'm glad that I didn't quit. So here's what I did, if you don't mind me. I'll share sort of my experience. Um, okay, I asked myself, what did I do differently with Forex compared to all the other entrepreneurial things that I had done in my life before? I asked myself a basic question. What was my secret to success in my, you know, previous professional career? And I realized two things. I always had a plan, and I always surrounded myself with successful people. And that kind of formula seemed to bring me at least some level of success. And I realized at that time when I was doing Forex, I was completely alone. This is probably about the time I actually ran into FXstreet, you know, a little bit before, but at that time I was completely alone. I didn't even know another currency trader. I knew someone that got into options, and he was really excited all the time. Oh, I made so much money today, Wayne. I'm like, really? Because I'm just kind of doing a little, you know, I'm doing okay. And then he's like, I made a killing. And then he blew up his trading account, and he never talked about options again. So anyway, so I found myself alone doing currency trading and didn't know another currency trader. And I wasn't doing amazing. And I tried hard, and I was waking up in the middle of the night and all this kind of stuff, and it just wasn't clicking. And I felt like giving up because I had a full-time job. I was a busy person. I was doing interesting things. And I liked it. I just wasn't there. I just wasn't getting what I wanted, right? So I thought about quitting, but before I did, I really, really thought about it. And I said, well, I don't have a plan like I normally do. My plan at Forex was sitting down today and is making as much money as I possibly could today. But that's not a plan. That's a situation. But that's not a plan, right? Oh, well, you know, maybe I should define what success is. You know? And so, well, how do you write a business plan for your currency trading? So I actually created a mission statement, an operational direction statement. I did a strengths, weaknesses, opportunities, and threat analysis. From that, I created key result areas. And from that, I created action items that were specific, measurable, attainable, realistic, and timely. And from that, I created a budget based on 2 years of pro forma cash flow statement analysis. And to do this, I actually I went on a business planning retreat with myself. I booked a suite at the Ritz Carlton in Half Moon Bay, California, with a view of the ocean. It even had a little stone patio out front with a gas fire pit on my balcony. So I can sit outside and drink a whiskey and smoke a cigar and ponder my Forex trading business. I scheduled meetings with myself. I had agendas for the meetings, and I documented things on letterhead. Does it sound like I'm just winging it, or does it sound like I took it deadly seriously? And it was probably one of the most amazing weekends of my life. Honestly, there were so many breakthroughs for me analyzing Forex as a business, and it changed everything for me. One of the things that it did for me is identified that I didn't need to make a lot of money today. I didn't need to make a lot of money tomorrow or the next day or the next day or the next day. It was very interesting. And it took an amazing amount of pressure and weight off my shoulders. Because I realized if I'm looking at my trading 2 years in advance, that the only way that you can do 2-year cash flow statement, all pro forma, obviously, because it hadn't happened yet, I had to project an average. Well, this did two things. What is a specific and measurable, attainable, realistic daily goal for pips? Some days you're going to do very well. Some days you're going to do poorly. What is your average? Answer the question. You know, I must have spent 5 hours analyzing my trades to come up with that. And I found I could get lucky, make 10 pips, and still be wrong. I can still make money, but I can make 10 pips and it'll come back or whatever. It just doesn't go anywhere. 10 pips was easy. 15 pips. If I can get 15 pips, I could probably get 50 pips. Or certainly 30. And I started looking at, years of trading data. And a couple of outcomes came from that. One, I actually knew my trading better. And two, I came up with this idea of minimal acceptable performance. If I wasn't certain, based on my analysis, that I could make 15 pips, I probably shouldn't take the shot. So all of a sudden, my trades became worth 33 to 50 pips. Because if I wasn't certain I was going to pick that up, I wasn't going to make the trade. And so minimal acceptable performance is suddenly I called it MAP. I was going to make at least one trade a day, and that trade was going to be worth 50 pips. And if I screw it up, I'm only going to get my minimal acceptable performance. If I screw it up, I only get 15 pips, which means I take the shot, I expect 50. And I'm going to manage my stop. It's going to be close, but not too close. And then once I get 20 or 30 pips, I'm going to move my stop to break even or lock in my map, and I'm going to pick up 50 pips. Or I'm going to pick up 15 pips. Now, some days I'm going to take losses, but some days I'm going to hit my 50 pips. And when you average it all out, I get my map every single day. So I said, oh, well, that's interesting. How much does it add up to over the course of a year or two? And I found out, based on the lot size I was trading, I would have $375 million profit at the end of 2 years if I kept trading at that lot size. Sounds good, but it also told me that I clearly was over-leveraged. So I said, well, that's interesting. It wasn't a goal, right? Because part of the goal is it has to be realistic, all right? Specific, measurable, attainable, realistic, and timely. Come on, I wasn't going to try to make $158 million in 2 years. That wasn't my goal. My goal was to build a foundation for a business that can succeed forever. So I said, you know what? I'm over-leveraged. No. Philippe says, but how do you account for losses? That's what the average was. Remember, I started by analyzing my trading history to identify my strengths and weaknesses. And then from that, I realized how to manage my trades by moving the stops and locking in a minimal acceptable performance. So if I was up 30, I would lock in 15. And, much of the time I would hit the 50 pips. some of the time it would come back and knock me out with 15 pips. And then sometimes I wouldn't even get that far and I'd lose a little bit of money. But the losses would get covered by my sort of, like, it wasn't these numbers, but let's just play with them. Let's say 33% of the time I lost 25 pips. 33% of the time I made 50 pips. And 33% of the time I made 15 pips. I end up being profitable. All right? And so my average win turns out to be about 22 pips. Above my minimal acceptable performance, okay? So now, based on compound interest, see what I was doing, guys, is based on the lot size. If I kept growing the lot size based on how much my account size has grown, and I said to myself, how much money am I going to pay myself? How much money am I going to take out of the trading account at the end of the month? Okay. Well, Andy, I'm dealing with averages. Okay. Yeah. If you wake up one day and you screw it all up, you're right. Okay, so let me just skip. Okay, let me skip to the end for Andy here. I looked at my 15 pips a day and realized that 2 years, based on how much I was trading right now, I'd make $150 billion a year. Okay? So look, Andy, yes, I'm over leveraged. I don't need to make $150 billion a year. But here's the thing, Andy. It told me that I don't need to take big risks. Because if I just simply achieve the minimal acceptable performance on average or for a long period of time, for like 2 years, I'm going to make more than enough money. In fact, too much money. Therefore, I actually should reduce my risk. But there was no pressure today or tomorrow or the next day to make a lot of money. So therefore, I didn't need to take big bets. Therefore, I never put myself in a situation where I'm going to get into long-term losing streaks or have big drawdown days or just big blowout days where I lose a lot of money. Well, to lose a lot of money, you have to risk a lot of money. But I don't need to risk a lot of money because I have a 2-year business plan that shows me I just have to do average. I'm going for easy. You see? And it changed everything. So suddenly I had no pressure to perform above average today, because the only way I could be above average is to either get really lucky and the market moved, fine, so I made a lot of money. Don't worry about it because you're going to lose it on another day. The winners only pay for your losers. I live on the average. I live on the mediocrity. Because the good days are going to pay for the bad days. Don't worry about it. But I never have to load the boat. I never have to make a lot of money today, because to make a lot of money today, I need to take a big risk. But I don't need to make a lot of money today, so I never need to take the risk. Because I'm a man on a mission. And it felt so good. And here I realized by now analyzing compound interest over 2 years, I was also risking too much money. So what I did is, as my account size grew, I reduced the lot size relative to the account size. I didn't increase my risk over time. On a percentage basis, over time, I reduced my risk so that I had a higher probability of staying a currency trader all the way to the end of the 2-year goal. because I realized $150 billion in 2 years was not a realistic goal. So clearly I have too much risk now, but I need to make the money now because I don't have much money relative to the $150 billion I'm going to have. So I said, well, what do I need to do to reduce it? What's a realistic goal? Okay. No, it's not lot size according to the percentage, like that. It's what is the realistic goal I need to make dollar-wise over the course of the year and adjust for that. So I wouldn't take a 2% position, one position with 2%. It'd be more like if every trade I made for the month was a loser, I would lose 2%. Total, not per trade. Okay? If I made 20 bad trades in a row, I would lose 2%. Right. Of course, it's very small. Okay? But reverse it, Kenny, right? I've had, in my trading career, over 100 open positions at once, with 98% available margin. So, if I lost every trade, I'd be out 2%. But if the market goes up, I make 10%. Okay? Right. All right. So this is what happens for people that don't have a lot of money. They're like, right? Oh, but Wayne, that means I'm trading, nano lots. Well, if it's important to you, take a second job. Save your money. Get capitalized. If you believe you're going to trade your way out by taking higher risk, you're just not listening to me. No. If it's important to you, take another job. Sell your car. Sell your house and get a smaller house. So, I know somebody, and he might even be in the room here today. He did that. He went into his garage, sold everything in his garage he didn't need. He sold his car, and he sold his dog and put everything into his Forex account because it was his number one goal. Yeah. Awesome. All right. Take a second job, save money, work 2 years on your second job, work nights and weekends. What do you care? And save your money. And while you're doing that, trade on a demo account and practice properly, not just making a bunch of trades. You won't get better that way. And develop skills over the course of 2 years that you're saving your money so that in 2 years you should have a track record of success on your demo account based on many months of successful trading. Adding money to that account at that point, once you've proven to yourself with your own track record of success that you have the skills and the confidence necessary to open up a real trading account so that you take your money you've now worked for and saved for 2 years and you wire it to tradersway.com, put it into an MT4 account, and you start trading and you make money the rest of your life trading Forex. And you'll say, you know what? Some people spend $100,000 and go to grad school and get an MBA. Hey, it takes them 2 years. It's hard work. So what? Why can't you do the same, work hard and save money and develop proper trading habits and trading skills? Just think of it. You're going to grad school and getting your MBA. Work your butt off. Earn it, for crying out loud. Oh, but Wayne, that's 2 years. Uh-huh. Yeah. People do it all the time to become successful. Okay? So that's what I did. And you know what? Going back to CC's comment, it changed everything for me, CC. And then the other thing, so I had minimal acceptable performance. I took the pressure off the weight off my shoulders to perform every single day. I had specific, measurable, attainable, and realistic timely goals. I had a long-term plan. I was lowering my risk as I increased my lot size. Oh, I found that the less I pay myself every month, the more money I make at the end of the year. That was another thing that came out of that weekend. So I said to myself, so I did all of this on spreadsheets, right? And I said, all right, if I paid myself 30% of my monthly profits and put 70% back into the trade account, how much money would I make? And I took it out monthly, and at the end of the year, I had a certain account size. Then I said, well, what if I only paid myself 20% per month? I found out at the end of the year I made more money and my account size was larger. What? So I'm like, oh, that's awesome. Well, what if I only pay myself 15%? Well, it's less today, but at the end of the year, it's more money. And I have a larger trading account, so I make way more money in year 2. And I'm like, oh my gosh, you're joking. The less I pay myself today, the more money I make at the end of this year, but the more money I make in 2 years. Holy smokes. So I'm like, do whatever it takes to grow your account size, not to increase your lot size. Do you understand? Assets under management, not 5,000 to 1 leverage. There's a difference. Okay? Oh, yeah. Yeah, VJ, of course. I've done non-farm payrolls live 114 times in a row. Okay? So there's a lot that came out of this, out of that weekend. Just an amazing amount. And the next thing is I realized I was trading alone. And so I started working with FXstreet.com, and I created a Forex trading community called FXbootcamp.com. And I started using webinar software to broadcast me trading live before really anybody else. Before FXstreet did webinars, I was doing live trading. Because I needed to surround myself with other successful currency traders. And when I first started trading, there was no educational resources out there except what scumbags and scam artists were selling. So I felt to me like it was a big secret, and I had been working for years to figure out what the secret to Forex trading. So I just said, you know what? I'm going to create a community. I need people around me. I can't do this alone, and I'm going to attract fellow currency traders by simply showing them what I do. And that came out of that weekend. Okay. VJ, this is MT4. So anyway, CC, maybe have a business planning retreat with yourself and talk to yourself and do some analyzing, look at your trading, maybe create a business plan or something, something. But you have us here. You've put years into it. Maybe you just need a helping hand from a community like you have here. Okay? Because I've been in that place before, and mostly probably because I'm an entrepreneur, I'm too stupid to quit. right? There's a common bond between the 105 people in this room right now. We must be entrepreneurial. We have to be. 95% of amateur retail traders have been reported to fail. 95%. All right? So for some reason, we're all here. If you were sane, you wouldn't be here. Do you understand that? That's our common thread. We're different people from different cultures with different experiences, different age groups, different religions, different sexes, different sexual preferences. We're all very, very different people, but the one common denominator we have is for some reason you're here. Okay? And if I stood on the corner of a busy street in a town somewhere out there in the universe, and I said, "Hey, let me show you something that 95% of people lose it at. Would you want to join me?" People would laugh. A smart, sane person would laugh when you said 95% of people failed. Do you want to get involved? They're like, "There's no way. Are you stupid or something?" But then you find an entrepreneur and you're like, "Really? 5% are successful? Holy smokes. Yeah, what do you got?" So we're here. Because I find 5%, all I have to do is beat 95% of people. That's easy. Right? 95% of people are lazy, undisciplined, whiny little crybabies that are afraid of everything. So they sit in their little cubes in the big factory, and they try to look busy all day, and they fear their boss coming around the corner and looking at their screen. Oh, better call a meeting. Right? Better call a meeting. Need to look busy. And they get through their life of quiet desperation. I ain't going back to that. You know? And here's what I love. Paying an unbelievably high tax rate. 2, you have to buy a car, pay for the car, pay for the insurance for the car, put gas in the car, put tires on the car, change the oil every month, and drive for an hour or 2 a day to your boring job with your loser boss. And that woman that keeps burning popcorn in the microwave at 4 o'clock every afternoon, and you have to pay for that privilege? And what do they pay you? $65,000. Hey, guess what? I got a big promotion and a big raise. I'm going to make $62,000 an hour. I'm going to make $67,000. It's so awesome. It's so great. And this year I get 2 extra days of vacation. Yeah, what a life. Awesome. So, someone at the company is getting rich. Do you understand? The people at the top are laughing all the way to the bank because they have 10,000 people that are willing to put in $1 million worth of, output, but only be paid $85,000 in income. Guess what? They're the ones flying around in the helicopters. All right? So, I don't know. I'm willing to fight. And I look at it like 95% of people fail. What happens to the money? Oh, well, they give it to the 5% that win. Really? Well, is that a lot of money? Oh, well, there's 5 trillion a day in turnover. Really? I remember when I first ran into Forex, it was like 2 trillion a day. And I was a venture capitalist at that time, and I was searching for products to invest in that could make me, 100 million a year in not even revenue, in potential market opportunity. I mean, just what is the overall market? Is it $100 million, and all of a sudden, a year? Not even that company. The whole entire market, is it worth 100 million a year? Right? Like, how many toothbrushes are sold in America every year? If I have a better toothbrush, well, what's the total market? And then if I got 1% of that market and all that kind of stuff, right? And I read this thing about $2 trillion a day, and I said, well, that's just stupid. I remember thinking it. 2 trillion a day, that's just stupid. There can't be that much money. Can there? That was my question. Seriously. Really? And I started looking into it, and that was the rest of my life. Eventually, I was promoted to vice president of the firm. We had 300 employees. And then suddenly I went on a business planning retreat with myself because I had to make a decision. I was just promoted to VP. And I quit. But I didn't quit Forex, CC. I was pretty close. But instead, I quit the firm. Walked away from my beautiful office in the skyscraper in beautiful downtown San Francisco. Right on the waterfront. Next door to the Federal Reserve Bank of San Francisco. So anyways, that's my story, CC. Right? Now my kids burn the popcorn in the microwave at 4 o'clock in the afternoon. But it's much better. And if I'm having a stressful day, I go outside, I sit on my deck with a big, beautiful lake to look at, I smoke a cigar with a warm sun on my face, and I say, you know what? This is awesome. Currency trading is awesome. This is so awesome. You know what? I've almost forgot about these things. You know what else I used to hate? Every day there was some guy with a birthday, and you had to buy him a birthday cake. Oh, it's Jimmy's birthday today. We got him a cake. It's in the break room. Like, Jimmy's an idiot. Really? Right? You're like, really? You're wasting the time of the administrators? You're asking them to order cake for Jimmy? My admin's working on pumping out contracts for me. That's what my admin does. I'm not going to waste her time buying cake for Jimmy. Happy birthday. Congratulations. You're still alive. Good job, Jimmy. So I just didn't like any of that. So you can take that. You can have corporate America. It's yours. Take it. I'm not interested. I'm willing to fight for it. I'm willing to fight for Forex is all I'm saying. So good luck, CC. Walk away from trading for a little bit and look at it from a business is what I did. But I'm a business person. But look at it from whatever you need to do and fight for it, and it's worth it, okay? Thank you, FXstreet. The admin is hitting the gong. It's time for me to go. Thank you, FX.